Sorry, I was just sneezing my face off. Shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here, sharing your most precious asset with me, and that is your time. There's the volatility coming through on BOOKMAP. We're going to break it down for you right away. We're going to show you what's happening. 0.25 basis points has come in. 0.25 basis points has come in. Let's show you the levels on liquidations here on BOOKMAP. Headed down to the 20,800 level. They did boom. Remember that was that 20,006 boom area that I said we're probably going to hit right when the Fed meeting comes and then bounce. You know, so far we're about to head into the liquidity. 2,600 Bitcoins. That's a huge buy right there. That's a huge buy. What was that song in the intro? Wait, my SoundCloud is up. So you can find out what it is. Pay the man, hit that like button. Shout out to everybody here. We got the lemon water. And let's get into Jerome Powell in the meeting. Let's break down the meeting. We're about to jump into the meeting now. Let's get ready for the Fed meeting. It's always late.
It remains.
Here we go. Sorry.
The longer the current bout of high
We got it.
continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective.
Cooking the books.
At today's meeting, the committee raised the target
They're gonna
range for the
cook the
federal
books.
funds rate by 25 basis points, bringing the target range to 4.5 to
His hands are
4.75%.
shaking today. Look at that.
And we are continuing the process of
He's like-
significantly reducing the size of our balance sheet.
He's like,
With today's action,
He looks
we
a
have
little
raised
weird
interest
today.
rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases. Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals, as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Chris.
Chris Rugaber, the Associated Press.
Yes, they
thank
put
you
him
for
right in
doing
the
this.
center.
As you know,
Unbelievable.
financial conditions have loosened since the fall, with bond yields falling, which has also brought down mortgage rates, and the stock market posted a solid gain in January. Does that make your job of combating inflation harder? And could you see lifting rates higher than you otherwise would to offset the increase in, or to offset the easing of financial conditions?
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial
exactly
conditions.
like I said it was going to do.
And it is our judgment that we're not yet at a sufficiently
So
restrictive
far.
policy stance, which is why we say that we expect ongoing hikes
It
will
was
be
obvious,
appropriate.
though, right?
Of course, many things affect financial conditions, not just our policy.
Sure.
And we will take into account overall financial conditions along with many other factors as we set policy.
Rachel.
Oh, he's not saying a word today. Oh, he's in and out
Hi,
today,
Chair
like
Powell.
In
Thank
and
you
Out
for
Burger.
taking our questions.
He's
Rachel
In-N-Out
Siegel from
Burger
the Washington
tonight.
Post. Over the last quarter, we've seen a deceleration in prices, in wages, and a fall in consumer spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much the unemployment rate would need to go up, if at all, to see inflation come down to the levels you're looking for?
So I would say it is a good thing that the disinflation that we have seen so far has not come at the expense of a weaker labor market. But I would also say that disinflationary process that you now see underway is really at an early stage. What you see is really in the goods sector, you see inflation now coming down because supply chains have been fixed. Demand is shifting back to services, and shortages have been abated. So you see that in the housing services sector. We expect inflation to continue moving up for a while, but then to come down, assuming that new leases continue to be lower. So in those two sectors, you've got a good story.
Oof.
The issue is that we have a large
Oof.
sector called non-housing service, core non-housing services, where we don't see disinflation yet. But I would say that so far, what we see is progress, but without any weakening in labor market conditions.
Oof.
Has your
Um, Go ahead.
Has your expectation for where the unemployment rate might go
Let's
changed
go.
since December?
Let's
You know,
go.
we're going to write down,
23,300. That's
new
my area we
forecasts at
needed.
the March meeting. And
Close
we'll
the
see at
daily
that time.
candle.
I will say that it is gratifying to see the disinflationary process now getting underway, and we continue to get strong labor market data. But we'll update those forecasts in March.
Neil.
Hi, Chair Powell. Neil Irwin with Axios.
Sure, pal.
You and some of your colleagues have emphasized the possibility that job openings could come down and that that would let some of the air out of the labor market without major job losses. We saw the opposite in the December JOLTS this morning, job openings actually rising. That also has coincided with slowdown in wage inflation. Do you believe that openings are an important indicator to be studying to understand where the labor market is and where wage inflation might be heading?
So you're right about the data, of course. What we've seen average hourly earnings, and now the
flag pushing.
employment cost index
About to hit my target.
abating a little bit, still off of their highs of 6 months
23,366,
ago
baby.
and more.
Let's go.
But still at levels that are fairly elevated. The job openings number
Dove it up.
JOLTS has been quite volatile recently, and I did see that it moved back up this morning. I do think that it's probably
Yo, the
an
shorts
important
are getting
indicator.
rocked.
The ratio, I guess, is back up to 1.9 job openings to unemployed people who are
Shorts are
looking for
getting
work.
rocked.
So it's an indicator, but nonetheless, you're right. We do see wages moving down.
It's fun watching
If
the
you look
shorts
across
get
the
hit
rest
and
of
the green
labor
candle
market, You
pump.
still see very high
30-second short.
payroll
Woo!
job creation.
Keep shorting.
And
Ooh, that was a spike.
quits are still at an elevated
Ate
level.
that whole
So
candle.
by many indicators, the job market is still very strong.
DXY. Ooh. Look at that.
Thank you. Colby Smith with the Financial Times.
Colby.
Given the economic data since the December meeting, is the trajectory for the Fed funds rate in the most recent SEP still the best guidepost for the policy path forward? Or does ongoing now mean more than 2 rate rises now?
So you're right. At the December meeting, we all wrote down our best estimates of what we thought the ultimate level would be, and that's obviously back in December, and the median for that was between 5 and 5.25%. At the March meeting, we're going to update those assessments. We did not update them today. We did, however, continue to say that we believe ongoing rate hikes will be appropriate to attain a sufficiently
hit the
restrictive
target.
stance of
Will they
policy
hit
to
my
bring
target on
inflation
the
back down
flag?
to 2%. We think we've covered a lot of ground.
We think.
Financial conditions have certainly tightened. And I would say we still think there's work to do there. We haven't made a decision on exactly where that will be. I think, we're going to be looking carefully at the incoming data between now and the March meeting and then the May meeting. I don't feel a lot of certainty about where that will be. It could
Send it
certainly
to
be
the
higher
target.
than we're writing down right now.
about to hit
If
my
we
target.
come to the view that we need to write down to move rates up beyond what we said in December, we would certainly do that. At the same time, if the data come in the other direction, then we'll make data-dependent decisions at coming meetings, of course.
Just as a quick follow-up, how are you viewing the kind of balance of risk between those 2 options of, the likelihood of maybe falling short of that or going beyond that level?
I guess I would say it this way. I continue to think that it's very difficult to manage the risk of doing too little and finding out in 6 or 12 months that we actually were close but didn't get the job done, and inflation springs back and we have to go back in, and now you really do worry about expectations getting unanchored and that kind of thing. This is a very difficult risk to manage, whereas of course we have no incentive and no desire to over-tighten, but if we feel like we've gone too far, we can certainly, and inflation is coming down faster than we expect, then we have tools that would work on that.
No.
So I do think that in this situation where we have still the highest inflation in 40 years, the job is not fully done. As I started to mention earlier, we have a sector that represents 56% of the core inflation index where we don't see disinflation yet. So we don't see it. It's not happening yet. Inflation in core services ex housing is still running at 4% on a 6 and 12-month basis. So there's nothing happening there. In the other 2 sectors, representing less than 50%, you actually, I think, now have a story that is credible, that's coming together. Although you don't actually see disinflation yet in housing services, but it's in the pipeline, right? So for the third sector, we don't see anything here. So I think it would be premature. It would be very premature to declare victory or to think that we've really got this. We need to see. Our goal, of course, is to bring inflation down. And how do we get that done? There are many, many factors driving inflation in that sector, and they should be coming into play to have inflation, the disinflationary process, begin in that sector. But so far, we don't see that. And I think until we do, we see ourselves as having a lot of work left to do.
Howard Schneider with Reuters, and thanks as usual. So I just wanted to connect a couple dots here. The statement made a number of changes that seem to be saying things are getting better. You're saying inflation has eased. That's new. You've taken out references to the war in Ukraine as causing price increases. You've taken out references to the pandemic. You've eliminated all the reasons that you said prices were being driven higher. Yet that's not mapping to any change in how you describe policy. We still have ongoing increases to come. So I'm wondering, why is that the case? And does it have more to do with uncertainty around the outlook, or more to do with you not wanting to give a very overeager market a reason to get ahead of itself and overreact?
So I guess I would say it this way. We can now say, I think, for the first time, that the disinflationary process has started. We can see that, and we see it really in goods prices so far. Goods prices is a big sector. This is what we thought would happen
fudged the
at the very
numbers.
beginning, and now here it is actually happening, and for the reasons we thought. It's supply chains, it's shortages, and it's demand revolving back towards services. So this is a good thing. This is a good thing. But that's around a
control
quarter
right
of
here.
the
Point of
PCE
control,
price
everyone.
index. Of core PCE price index. So the second sector
Target hit.
is housing services.
Come on.
And that's
Come on.
driven by very different things. And we, as I mentioned, with housing services, we expect, and other forecasters expect that measured inflation will continue moving up for several months, but will then come down, assuming that new leases continue to be soft. And we do assume
We hit the
that.
target.
So we think that that's sort of in the pipeline. And we actually see disinflation in the goods sector, and we see it in the pipeline for two sectors that amount to a little less than half. So this is good. And we note that when we say inflation is coming down, this is good. We expect to see that disinflation process will be seen, we hope soon, in the core goods ex-housing, the core services ex-housing sector that I talked about. We don't see it yet. It's 7 or 8 different kinds of services. Not all of them are the same. And, we have a sense of what's going on in each of those different subsections. Probably the biggest part of it, probably 60% of that is research would show is sensitive to slack in the economy. And so the labor market will probably be important. Some of the other ones, the labor market's not going to be important. Many other factors will drive it. In any case, we don't see disinflation in that sector yet. And I think we need to see that. It's the majority of the core PCE index, which is the thing that we think is the best predictor of headline PCE, which is our mandate. So it's not that we're neither optimistic nor pessimistic. We're just telling you that we don't see inflation moving down yet in that large sector. I think we will fairly soon, but we don't see it yet. Until we do, I think we see ourselves, we got to be honest with ourselves, we see ourselves as having perhaps more persistent inflation in that sector, which will take longer to get down.
We want to bounce off this point of control, everybody. We want to bounce off this point of control. We get this, we're going to 23.5, baby.
Nick Timoros, The Wall Street Journal.
Look, they ate,
Chair Powell, you
and we
observed
bounced.
several years
Chair Powell.
ago that we learned we can have a low unemployment
This guy's
rate
cool.
without above-target inflation, and we have learned lately that inflation can come down from its uncomfortably high level despite a historically low unemployment rate. Given that, and given how much you did over the last year, why do you think further rate increases are needed? Why not stop here and see what transpires in the coming months before raising rates again?
So we've raised rates 4.5 percentage points, and we're talking about a couple of more rate hikes to get to that level we think is appropriately restrictive. And why do we think that's probably necessary? We think because inflation is still running very hot. We're, of course, taking into account long and variable lags, and we're thinking about that. The story we're telling about inflation is, to ourselves, and the way we understand it, is basically the three things that I've just gone through a couple times. And again, we don't see it affecting the services sector ex-housing yet. But I mean, I think our assessment is that we're not very far from that level. We don't know that, though. We don't know that. So I think we're living in a world of significant uncertainty. I would look across the spectrum of rates and see that real rates are now positive, by an appropriate set of measures, are positive across the yield curve. I think policy is restrictive. We're trying to make a fine judgment about how much is restrictive enough. That's all. And we're going to, that's why we're slowing down to 25 basis points. We're going to be carefully watching the economy and watching inflation and watching the progress of the disinflationary process.
Did you or your colleagues discuss the conditions for a pause at this meeting this week?
You'll see the minutes will come out in 3 weeks, and we'll give you a lot of detail. We spent a lot of time talking about the path.
Sorry,
ahead
cup and handy.
And the
So
state of the
23.5.
economy. And I wouldn't want to start to describe all the details there, but that was the sense of the discussion, was really talking quite a bit about the path forward.
Without resistance. It goes through this one. We need this one here. We need a candle close
Hi, Chair
here.
Powell. I wanted to ask about the debt ceiling. Given that we've now hit up against it, I was wondering if the U.S. goes past the X date, will the Fed do whatever the Treasury directs as it relates to making payments as the fiscal agent, or will it do its own analysis of any legal
77.
concerns?
So your question is, would we say your question again?
Will the Fed do what Treasury directs as it relates to making payments, or will it do its own analysis of
He was
any
watching
legal
my stream.
constraints?
So you're really asking about, you're asking about prioritization, in effect, is what
Yes,
you're, okay.
yes.
So I feel like I have to say this. There's only one way forward here, and that is for Congress to raise the debt ceiling so that the United States government can pay
It's
all
about
of its
to bang to my
obligations
target
when
again?
due. And any deviations from that path would be highly risky, and that no one should assume that the Fed can protect the economy from the consequences of failing to act in a timely manner. In terms of our relationship with the Treasury, we are their fiscal agent, and I'm just going to leave
Justin
it at that.
Cashmore.
Are you actively doing any
Here we go.
planning of what might
We hit
happen
my target
in the
again,
event
man.
that
We
would
over the
happen?
we over the
I'm
resistance.
just going to leave it at that. This is a matter that's to be
23.5.
resolved between
23,500 for Bitcoin.
The debt ceiling,
Can we do it?
And I gather there are discussions happening, but they don't involve
Cup and
us.
handle
We're
to the
not-
upside. The
we're not
measured
involved in those
move.
discussions, so
Make me happy, baby.
we're the fiscal agent.
Give daddy a new pair of shoes. Roll those dice. I mean, that's good enough. Like, I'll take that. Like, that's good enough.
Gina Smilek from the New York
Close
Times.
that.
Thanks for taking our questions.
That's
I wonder, was there any discussion today of the possibility of
Yo.
pausing rate increases and then restarting them? Lori Logan from
Shorts
the Federal
got
Reserve Bank of Dallas seemed to
squeezed.
suggest that that would be
Basically
a
a million.
possibility in a recent speech, and I wonder if that view is broadly shared on the committee.
So the committee, obviously, did not see this as a time to pause. We judged that the appropriate thing to do at this meeting was to raise the federal funds rate by 25 basis points, and we said that we continue to anticipate that ongoing increases in the target range will be appropriate in order to attain that
It's
stance
it, it's it, we hit it.
of sufficiently restrictive monetary policy.
Yo, we
that
did
will
it
bring
again.
inflation down to 2%. So that's the judgment that we made. We're gonna write down new forecasts in March, and we'll certainly be looking at the incoming data as everyone else will.
We did it again.
There. I mean, would it be
Lifers!
possible to take a meeting off, for example, and then resume? Could you, rather than just doing at every meeting a move, go a little bit more slowly, take some
BookMap
gaps
showed
in
you right
between
where to
moves?
buy.
I mean,
Right where
I
to
think
sell.
this is not something that the committee is thinking about or exploring in any kind of detail. In principle, though, we used to do was go every other meeting, if you remember, 25 basis points, and that was considered a fast pace. So I think a lot of options are available, and you saw what the Bank of Canada did, and they left it that they're willing to raise rates after pausing. But this is not something that the Federal Open Market Committee is on the point of deciding right now.
Steve Leisman, CNBC. Mr. Chairman, the SEP has the PCE inflation rate in 2023 at 3.1%. Meanwhile, the 3-month annualized PCE is 2.1%, and you've achieved this without going to your 5.1% funds rate, which is what you have penciled in for this year. And you've also achieved it without the 1 percentage point increase in the unemployment rate, which you have penciled in for this year. I'm wondering if you've considered the idea of whether or not your understanding of the inflation dynamic may be wrong, and it's possible to achieve these things without raising rates that high, and also without
Why would he say that?
without the surge in unemployment. And
Why would he say he was
specifically, I
wrong?
wonder if you might comment on the speech given by
Who's
Vice
this?
Chair
Get
Lael
this
Brainerd,
guy
who
outta
said,
here.
to the extent that inputs other than wages may be responsible in part for important price increases for some non-housing services, an unwinding of these factors. In other words, it may not be wages, the idea that it may not require unemployment rising to get this sector of inflation under control. Thanks.
So a couple things. First, on the forecast, if you're right. If you take very short-term, three-month, say, measures of PCE, core PCE inflation, they're quite low right now. But that's because that's driven by significantly negative readings from goods inflation. Most forecasters would think that the significantly negative readings will be transitory, and that goods inflation will move up fairly soon back up to its longer run trend of something around 0, something like that. So a lot of forecasts would call for core PCE to go back up to 4% by the middle of the year, for example. So that's really where the sustainable level is more like at 4%. So that would suggest there's work left to do. Let's say inflation does come down much faster than we expect, which is possible. As I mentioned, obviously our policy is data dependent. We would take that into account. In terms of the core non-housing services, as I mentioned earlier, it's a very diverse sector, 6 or 7 sectors, and so sectors that represent 55 or 60% of that subsectors of that sector we think are sensitive to slack in the economy, sensitive to the labor market in a way. But some of the other sectors are not. And for example, financial services is a big sector that's really not driven by labor markets, wages. So that's why I said there are a number of things that will affect. Take restaurants, right? So clearly labor is important for restaurants, but so are food prices. And transportation services is going to be driven by fuel prices, for example. So there are lots of things in that mix that will drive inflation. I would say overall, though, my own view would be that you're not going to have a sustainable return to 2% inflation in that sector without a better balance in the labor market. And I don't know what that will require in terms of increased unemployment, your question. I do think there are a number of dimensions through which the labor market can soften. And so far, we've got, as I mentioned, in goods, we have inflation moving down without the softening in the labor market. I think most forecasters would say that unemployment will probably rise a bit from here, but I continue to think that there's a path to getting inflation back down to 2% without a really significant economic decline or a significant increase in unemployment. And that's because the setting we're in is quite different. The inflation that we originally got was very much a collision between very strong demand and hard supply constraints, not something that you really have seen in prior business cycles. And so now we see goods inflation coming down for the reasons we thought, and we understand why housing inflation will come down. And I think a story will emerge on the non-housing services sector soon enough. But I think there's ongoing disinflation, and we don't yet see weakening in the labor market. So we'll have to see.
Can we get there with 5%?
Still got these big orders.
Certainly possible. Yeah,
well, maybe going right back down.
It's a question. No one really knows. I think it's because this is not like the other business cycles in so many ways.
With this slide.
It may well be that that it will take more slowing than we expect, than I expect, to get inflation down to 2%. But I don't. That's not my base case. My base case is that the economy can return to 2% inflation without a really significant downturn or a really big increase in unemployment. I think that's a possible outcome.
Love you too, Maddie.
I think many forecasters would say it's not the most likely outcome, but I would say there's a chance of it.
Michael.
Michael McKee from Bloomberg TV and Radio. I'd like to pick up on what you were just saying about a substantial downturn and ask, with the full weight of your tightening not in place yet, and with the progress against inflation, there's still a lot of talk about very, very slow growth going forward in 2023. And the recession indicators are all suggesting that we are going to see recession this year. So I'm wondering if you've changed your view, or you have a more nuanced view of what you think the danger to economic growth is going forward, and whether you're very close to perhaps tipping it into the wrong place, which calls for more restraint on your part.
So I do think most forecasts and my own assessment would be that growth will continue, positive growth will continue, but at a subdued pace, as it did last year. We had growth of GDP growth of 1% last year, and also final sales growth, which we think is a better indicator of about 1%. I think most forecasts and certainly my assessment would be that growth will continue at a fairly subdued level this year. There are other factors, though, that need to be considered. You will have seen that the global picture is improving a bit, and that will matter for us potentially. The labor market remains very, very strong, and that's job creation, that's wages. As inflation does come down, sentiment will improve. You also, state and local governments are really flush these days with money, and many of them are considering tax cuts or even sending checks. So I think that's going to support. They're also spending a lot. There's a lot of spending coming in the construction pipeline.
Funniest comments ever.
Both private and public. And so that's going to support economic activity. So I think there's a good chance that those factors will help support positive growth this year. And that's my base case is that there will be positive growth this year.
He knows he's going to make it happen.
Thank you. Rich Miller from Bloomberg. First of all, how are you doing?
Fine, thanks. Fine.
Good, good.
First guy to ask him how I was doing. Pretty classy.
I think earlier on in the press conference, you said you need to see substantially more evidence of inflation coming down. Can you give us some idea of what you're thinking of? You mentioned 3 months, that we've seen 3 months in a row. Governor Waller has suggested he might want to see 6 months. Is it just the inflation data, or do you have to see the labor market coming back into better balance to have that substantially more evidence metric?
I don't think there's going to be a light switch flipped or anything like that. I think it's just an accumulation of evidence. So of course we'll be looking, by the time of the March meeting, we'll have 2 more employment reports, 2 more CPI reports, and we'll be looking at those carefully, as all of us will, and we'll be asking ourselves, what are they telling us? Soon after that, we'll have another ECI wage report, which, as you know, is a report that we like because it adjusts for composition and it's very complete. And the one we got, I guess it was yesterday, was constructive. It shows wages coming down, but still at a high level. They're still at a level that's way above well above where they were before
just like it was supposed to
before the pandemic.
Unbelievable.
So I don't want to put a number on it in terms of months, but as the accumulated evidence comes in, it's going to be reflected in our assessment of the outlook, and that will be reflected in our policy over time. But I will say, though, it is our job to restore price stability and achieve 2% inflation for the benefit of the American public. We're not market participants have a very different job, and it's a fine job. It's a great job. In fact, I did that job for years, but in one form or another.
See that?
But we have to deliver that, and so we are strongly resolved that we will complete this task because we think it has benefits that will support economic activity and benefit the public for many, many years.
Edward.
Thank you, Michelle. Thank you, Fed Chairman, for taking the questions. So you've talked about we had solid job growth. I'm Edward Lawrence from Fox Business, by the way. We had solid job growth, a slight falling in the increase in consumer spending. It seems so far it's been relatively mild from the economy to go from a 9.1% CPI inflation to 6.5% CPI inflation. Is the hard part yet to come, to go from 6.5 to 2?
I don't think we know, honestly. So we, of course, expected goods inflation to start coming down by the end of 2021. And it didn't. It didn't come down all through 22. And now it's coming down, and it's coming down pretty fast. So I would say this is not a standard business cycle where you can look at the last 10 times there was a global pandemic and we shut the economy down and Congress did what it did and we did what we did. It's unique. So I think certainty is just not appropriate here. Inflation, it's just harder to forecast inflation. It may come down faster. It may take longer to come down.
Control right here.
And our job is to deliver inflation back to target, and we will do that.
But I think we're
going to be cautious about declaring victory and sending signals that we think that the game is won, because we've got a long way to go. It's the early stages of disinflation, and it's most welcome to be able to say that we are now in disinflation. But that's great, but we just see that it has to spread through the economy and that it's going to take some time. That's all.
How long do you see then the federal funds rate remaining at this elevated level?
So my forecast and that of my colleagues, as you will see from the SEP, and there are many different forecasts, but generally it's a forecast of slower growth, some softening in labor market conditions, and inflation moving down steadily, but not quickly. And in that case, if the economy performs broadly in line with those expectations, it will not be appropriate to cut rates this year, to loosen policy this year. Of course, other people have forecasts with inflation coming down much faster. That's a different thing. If that happens, if inflation comes down much faster, then we'll be seeing that, and it will be incorporated into our thinking about policy.
Simon.
Thank you, Chair Powell. Simon Rabinovich with The Economist. May I ask a further question about the language around ongoing increases? That, of course, implies at least 2 further rate rises. If you look at Fed Fund futures pricing, the implication is that you'll raise rates one more time and then pause. Are you concerned about that divergence, or do you think if everything breaks right, is that a plausible outcome?
Trader.
I'm not particularly concerned about the divergence, no, because it is largely due to the market's expectation that inflation will move down more quickly. I think that's the bigger part of that. So again, as I just mentioned, our forecasts, different participants have different forecasts, but generally those forecasts are for continued subdued growth, some softening in the labor market, but not a recession, and we have inflation moving down. Into the somewhere in the mid-3s or maybe lower than that this year. We'll update that in March, but that's what we thought in December. Markets are past that. They show inflation coming down in some cases much quicker than that. So we'll just have to see. And we have a different view, it's a different forecast, really. Given our outlook, I don't see us cutting rates this year if we get if our outlook turns true. As I mentioned just now, if we do see inflation coming down much more quickly, that'll play.
How can he go from not knowing anything to knowing exactly what's going to happen? You think that's weird?
Hi, Chair Powell. Scott Horsley from NPR. One of the changes in the statement this month is that the committee is no longer listing public health as among the data points you'll consider in assessing conditions. What should we make of that? Does the Federal Reserve no longer see the pandemic as weighing on the economy?
That's the general sense of it. Look, I personally understand well that COVID is still out there, but that it's no longer playing
then
an
everybody
important
laughed. Isn't that
role
funny?
in our economy. And
What are
we
y'all
kept
laughing
that
about?
statement in there for quite a while, and I think we knew we would take it out at some point. There's never a perfect time. But we thought that, people are handling it better, and the economy and the society are handling it better now. It doesn't really need to be in the Fed's monthly or post-meeting statement as an ongoing economic risk, as opposed to a health issue.
Nancy.
Welcome to the stream. I'm Sam Price. If you're new, thank you for jumping on in. We got BookMap on the left. We got the 30-second chart on TradingView on the right.
Marketplace. I wanted to go back to another thing that Fed Vice Chair Lael Brainerd said recently. She said she doesn't see signs of a wage price spiral. And I'm wondering if you agree with that.
I do. Yeah, I do. I don't see that yet. But the whole point is, once you see it, you have a serious problem. That means that effectively in people's decision making, inflation has become a really salient issue. And once that happens, that's what we can't allow to happen. And so that's why we worry that the longer we're at this and the longer people are talking about inflation all day long, every day, the more risk of something like that. But no, there's not much. It's more of a risk. It always has been more of a risk than anything else. By the way, I think it's becoming less salient, and people are. We pick that up in conversations, and I've seen some data too that show people are. Gradually, they're glad that inflation's coming down. People really don't like inflation. And as we see it coming down, that could also add a boost to economic activity. You look at the sentiment surveys now, and they're very, very low. With 3.5% unemployment and, high wage increases nominally by historical standards, why can that be? It has to be inflation, right? So I think once inflation is seen to be coming down in coming months, even, you will also see a boost to sentiment, I hope.
So that's what you're looking at most closely is consumer expectations.
That's at the very heart. It's consumers and businesses that essentially we believe that
I'll teach you how to do BookMap
expectations
in a little while, and then we'll clip it out.
Are a very important part of the process of creating inflation. That's a sort of a bedrock belief. In one way or another, it has to be. We think it's important, and in this case, I would say the risk 8 months ago or so, longer-term inflation expectations had moved up. We moved quite vigorously last year. Expectations seem to be well anchored, including at the shorter end now, not just the longer end. So it's, and I think that's very reassuring. I think, the markets have decided and the public has decided that inflation is going to come back down to 2%, and it's just a matter of us following through. That's immeasurably helpful to the process of getting inflation down. The fact that people now do generally believe that it will come down, that'll be part of the process of getting it down, and it's a very positive thing.
Oh my God! You hear what he just said? Like, I just
in the
can't
minutes
believe-
of the December meeting, there was a
So how come
sentences
Bitcoin
that
can't be good if people
struck
believe in
as
it?
important. When the committee said participants talked about this unwarranted easing of financial conditions was a risk, and it would make your life harder to bring inflation down. I haven't heard you talk much about that today or in the statement, so I was wondering, has that concern eased among members, or is that still something you're concerned about? Thank you.
I would put it this way, it's something that we monitor carefully. Financial conditions didn't really change much from the December meeting to now. They mostly went sideways or up and down, but came out in roughly the same place. It's important that the markets do reflect the tightening that we're putting in place. As we've discussed a couple times here, there's a difference in perspective by some market measures on how fast inflation will come down. We're just going to have to see. I'm not going to try to persuade people to have a different forecast. But our forecast is that it will take some time and some patience, and that we'll need to keep rates higher for longer. But we'll see.
Go to Brendan for the last question.
Hi, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask if the Fed takes into account at all the debt ceiling when it comes to quantitative tightening, given the fact that rapid or faster quantitative tightening could bring us closer, faster to that drop-dead debt ceiling deadline. Could it play an effect as we get closer to that drop-dead deadline this summer?
It's very hard to think about all the different possible ramifications, and I think the answer is basically I don't think there's likely to be any important interaction between the two, because I believe Congress will wind up acting, and as it will and must in the end, to raise the debt ceiling in a way that doesn't risk, the progress we're making against inflation and the economy and the financial sector. I believe that will happen. I believe it will happen.
Deficit spending.
We of course will monitor money market conditions carefully as the process moves on. For example, the Treasury General account will shrink down and then it will grow back up, and we understand there'll be lots of flows between there and the overnight repo facility and reserves. We understand all that. We're watching it carefully. We'll just be monitoring it. Thank you very much.
That's it. He's done. He's gone like the wind. All right. That was right from the actual website. Could be another possible, little side meeting. But, let's go over what happened. Let's talk about it. Let's break it down. Together, we started the morning going over Bitcoin. Right? Let me make sure everything is right. My viewers all over. Okay, yeah. So we started this morning going over Bitcoin 10 a.m. to 12 p.m., right? Looking at BOOKMAP, talking about the idea, and we saw this huge order down here, which is still here. And I was like, we're probably going to go down, maybe tap it. They'll get put up because they know that they can use this emotional time. A bunch of people are going to short and a bunch of people are going to long. I don't know why, but that's just what's going to happen. So there's going to be people to get hit on either side, right? So how low did we go? That we wicked to 22,000, about 730 though on the KuCoin chart. We could have gotten lower maybe on a futures, which we probably did. 23,336 right now. So what do we say? The 1 hour, huge move for Bitcoin, giant candle. And the thing about it was we got above this resistance, this point of control. We got above here. I keep talking about 23,300, right? It's really where these two candles are right there, right now, 23,280, 23,300 area. We want to close a candle above here, right? And I said that all day. I was like, I just want to get above 23,300, get above this previous high, right? Because we had a high, we had a low, we had a high, we had a higher low. Bitcoin had to put in a higher high to remain in the trend, and it did. So that's a proper trend right now. that we got going on, because now you can expect a higher low or a flag of some sort, right? And the symmetrical triangle so far, I mean, it could be a fake out breakout. Anything is possible, but so far, I mean, that's a clean breakout. We got a candle to close in the 1 hour time frame right there. Like, it got snatched, you know. We'll see what happens in this next 1 hour candle and see where it closes. But, you know, I like our odds and what we're doing. All right. You can go back to that. Is this the 30-second chart I was on here? When I was on Binance. That's why, right? Yeah. And remember, I had the 30-second chart. Well, if you were watching just now, we were watching the 30-second, right? And I wasn't saying anything, but like, and we were just kind of, you know, once we got up here, we had a little flag that popped. Then we built another flag, right? Then we had this cup and handle. It broke out. That's basically, look, and that's the cup and handle. See, this is your cup. That was your handle. I'll take away the complex head and shoulder that I was looking at, that I drew there. You know, hard to see, but, you know, a complex head and shoulder, in my humble opinion, even though it kind of bends. And I just kind of play with my mind, but, like, I saw that could break out. It did. You know, here's the cup and handle. You have wick to wick, which is the measured move, right? And that's exactly where you go. I mean, it's spot on. So this is kind of how it works, you know, and then now we're in this flag, see? And now I caught us in the flag with a double bottom W there, even though it's slanted, that's pretty nice. And what it does is it also kind of negates this head and shoulder at this point. I mean, we would have dropped lower, all right? But you do see a resistance point. Even on the smaller time frames, I mean, I know it's insane, but you could do whatever you want with whatever you have. Meaning, if you're good at patterns, you can play them on any time frame you want. And look, we did this with pattern trading. We didn't use any indicators. I had no, you know, I double clicked away from my indicators and just, you know, and I did see the order book at the same time I was watching BOOKMAP, right? BOOKMAP linked to the description below if you want to get into BOOKMAP, all right? And BOOKMAP is showing us who's buying and selling, and it's showing us who's getting liquidated on the order books, right? So we have some longs, some shorts, and so on and so forth, right? We have a big order there that's pretty close at 23.5. Suggests that we may tap it before we kind of end this run, but you never know. I would just keep things in flags and just trust the technical analysis. So this is a bit of a bear flag, a bull flag, right? It's a bullish rectangle, slightly slanted down, but we still call these bull flags, right? And this has a measured move, right? Which is the length of the base here from wick to wick. And yeah, it has a measured move to about 23,650. So this will be interesting to see if this can break to the upside for Bitcoin now. And, you know, we got what we wanted. We all thought we were going to get the 0.25. The fact that it started going down, that was, you know, I guess that's just to make people, you know, I guess to get the longs. Whoever thought it was easy to long, like they probably longed right here, right when it started, and thought they just put a stop loss. Or right here, they all started to long right when he came on and said, they said, oh, yeah. And then these are just all the people stop losses who got in. See, me as a trader, once we leave the pattern, I'm like, oh, man, I got a short. If we never get back inside, like I know this white line becomes basically the end all of end all. Like it's everything to me. That line has to stay. If that line gets broken, then I have, you know, it's a bearish retest and we do something else. Then I got to short the market. Like and back to the value area low. Like there's just no choice. But once I get back inside a pattern and the candle closes, now I'm more bullish to at least get to the top of the pattern. You break through that, you're looking for the retest. It's just funny how like fundamental technical analysis is right on the 30, it's right on the 1 hour, because it can't be wrong on one and wrong on another. Time doesn't matter. Like the 30-second chart is the same as the weekly chart to the charts. Like the charts don't care. It's all math to the charts. You get what I mean? It doesn't matter. We think it matters because time, you know, is such a big deal to us, but it doesn't really matter. That's like a frame, that's like a way to think about it, right? Trading's not just charts and you know, technical analysis. I mean, it is, but a lot of it is how you think too, right? So let's talk about Flux this morning that we talked about. Did it get a bit of a move here? Not huge, a little bit of a pump. Nothing crazy, but you know, a little bit of something there. To me, still technically in the angle. Did it? Yeah, you could kind of say it's still technically just in here. Might have to come on down one more time or break out and make a flag. But yeah, Flux is looking more interesting and tighter in the zone. Could get all the way up here to 138. Flux is on the radar as well. So we have a lot on the radar. A lot coming our way, a lot to look at. Wow, this thing just continued to moon. That's insanity, right? Insanity. Look, so that was like, yeah, it just kept going. It's going now too. It's just like, that's something you have to put on like the 30-second chart or less, and just, I mean, insane. Unbound was a high one for the day. Let's see. Yeah, we got 250%, 124%. And shout out to Sean, hit basically every one of these, like, in our trading group. Like, he's all over every single high coin. Like, it didn't stop. We put out this morning here for 19. It went sideways, never hit the stop loss, and would break to the upside. So technically, like, you go back, I mean, this is the trade this morning. It technically hit, for beautiful gains, and actually continued up a total of 29, but still holding about those 20% gains. And you just got to, you just rework your pattern. Once you get above a point of control, that candle got above it, and the next candle was just ripe for the picking. It's all about these VRVPs. You see a gap here until the next liquidity zone. So you don't really, this is the next place that you're going to eat is right here. It's like being on a highway. You want to pull over where there's food. Like here, there's just, no exits for a while. You got to keep driving. Then you see, oh, there's a, okay, I want to go eat, at Chili's or whatever it is. And there's the gap. Same idea. Just think about these gaps as no man's land. Price action's going to move from here, boom, right to there, because it's going to gap through this area, right? Then once it kind of hangs out in this little chunk, it's going to move from here to here because it's going to gap through this area, right? And then once it hangs out in here, it's going to move from here to here, right? And it's going to boom, 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 right? Through these gaps. It did it here too on this little gap. And it did it right there on that gap. It just, okay. This is a really key indicator that I'm using called the VRVP. Get to know it very well. It's the NVP, all right? It'll help you as a beginner trader really begin to understand where and why you would like to ride the liquidity and for what reasons you'd like to be in the liquidity, right? So shout out to everybody here who jumped in for the Powell meeting, may have stayed, never come to the stream before. I appreciate you. My name's Sam Price, the crypto lifer. I've been trading for 15 years, started trading gold and silver, started buying gold and silver to get myself away from inflation in 2009. Off Peter Schiff, which is crazy because now he's like anti-Bitcoin, but he's the reason I got into gold. And then I realized Bitcoin was just like, I eventually would find Bitcoin at $350, start reading about it, thought it was too expensive for a stock, didn't really realize what it was, did more and more research and would start buying Bitcoin in late, basically in 2017, mid-2017 and into late, and then would continuously buy it through 2019, 2020, would get into Cardano with 2 cents, Atom at, $3.78 and $5, Chainlink, I was going over it when it was $1.78 on my channel when I had 3 people watching me. So I was going over all these tiny coins because I just love, not only do I love TA, but I love crypto. And I love going over the technical analysis. I love breaking it down. To me, it's like, it's everything, And so it was just, it was just kind of how I went about it. And, yeah, I mean, that's making another ascending triangle, right? Boom, to the upside. So just to let everyone know who I am, if you just came to the stream, and I've been started trading. Then I started trading on the Toronto Stock Exchange, gold and silver. Got into gold and silver trading. Watched JNUG and JDST on the New York Stock Exchange almost every single day of my life. Would look at the price of gold every day for 7 years, it must have been. Maybe the first thing I looked at before I went to bed, and the first thing I would look at when I went to sleep every single night was the price of gold. Now you know what it is. It's Bitcoin. So I just kind of moved my obsession for gold into Bitcoin, and I've been trading kind of, cryptocurrencies since 2017. Joined a trading group, got a mentor, paid for a signals group, did all that, spent $2,000 on a signals group, then joined a group for $100 a month that really, really helped me and changed my life. Showed me how to be a man, honestly. And, a responsible person, a man or a woman. I don't want to be, show me how to be a responsible individual, man or woman, binary, however you call yourself, but you know what I mean? And so, yeah, let's take a look here at BOOKMAP. Again, they're shorting and they're getting liquidated, right? People thinking it's time to short. I mean, market's looking good. And I was saying that the market looks right to me as well. So I like what I'm seeing in the market. Very bullish. We've been putting out a lot of bullish signals the last few days, things that we're looking at. I've been talking about the bullishness. Let's take a look at the total market cap. I want to see how that looks, right? It's a big deal. Ooh, so sorry. I probably blew out How many people did I just completely piss off? So sorry. That'll get you up in the morning though, huh? So I don't know when I did it, but I see I drew this falling wedge here. And look, it broke out just like it was supposed to. So if you just do what the TA does, see how we did it on the 32nd? You just don't think and you just trade the shapes like a bot. You find it just works. Like it's crazy. The second you use emotion and you get attached, like it's bugging out. But look at that beautiful move there for Bitcoin, right? And what was like kind of getting everybody a little roused was like a shoulder, right? A head and a shoulder on the total market cap. And even that had a shoulder, a head, and a right shoulder there too. Some bearish tones there. That nice pump to the upside kind of changes a lot of stuff. We got above the point of control. We're back above $1 trillion market cap. It's a pretty big deal. And we broke through what I believe is, a little bit of resistance, so we're kind of at it again. Let's see if we can stay above this. Let's see if we can push up. I keep talking about closing a daily candle in the green box above the next resistance at $1.1 trillion. Look, resistance fell through, came up, came back. So resistance there, resistance here. And here we are again. We ran it. So we got to get through 1.02 trillion to about 1.036 trillion. We got to get through this zone. I want a daily candle to close inside of the green box up here. What's really good is we're in the high volume node. We just have to kind of get through this little chunk of change here, right? Short, get through whoever's here, trying to short, get through all their stop losses taken care of. Make sure there's enough longs to carry us, and then hopefully there's enough shorts up here too to get the market ripping. But we need to get back to 1.13, and then I go one step at a time. Let's get through the first green zone. We'll get to the next one, right? We're bullish as long as we stay above the 200 SMA on the 4-hour and the 200 SMA on the daily time frame. As long as we keep staying above this yellow line, we are going to be in pretty good shape. And it's the first time we have the 21 crossing. We're about to get a golden cross on the total market cap. When was the last time we got a golden cross on the daily on the total market cap? Anybody? 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 There's your death cross. Right there we had one. We had pumped, we had come back down. You could say we were sitting somewhere at about 2.1 trill, and we would go all the way to $3 trillion. So we would go from 2 to $3 trillion around somewhere here. See, around from here. You could say 2.1. You could even say like, you could front run it. We usually front run it like we're doing now when that's about to happen. So you could even say somewhere around 1.74, almost doubled. Pretty beautiful. So good sign there, right? And this is the total market cap. Like we shouldn't be seeing false signals here. And again here, this here as well. Another golden cross. Am I right or wrong, right? And I mean, what happened after that? And look, the first time, another cool thing is, let's go back in time. So price booms out, and the first thing it dumps, and then it comes back to what? The 21-day moving average. That's the first thing it's going to touch. It has to. We know this. And it's going to play a little bit of a game here, right? It's interesting. So this is kind of where we're sitting at, right? Damn it. Gets the chat going, though. BOOKMAP was fun, though, you have to admit. So look. We're bullish on Bitcoin as long as, or the total market cap. Oh, look at Bitcoin's careening. Look at this, baby. On the way to the target. I've been bullish. Sammy no short, no long. Sammy been long. Damn, look at that. Cup and handle. Just had to stay inside. See, all that mattered to me was that we stayed inside of this white line. And when we came back into it, you long the pattern. The pattern's back where it should be again. It was a symmetrical triangle. We could have broken up or down this morning. All right, 50-50 chance, but you just had to close a candle above the point of control. Nice move on the 10-minute chart here for Bitcoin, pumping to 23,585. Massive short liquidations on BOOKMAP. Massive short liquidations on BOOKMAP. So look, total market cap, back to here. We'll redo it, don't worry, we're good to go. We want a daily candle to close in this green box. All right. Daily candle to close in this green box. That's what we're looking for. All right? On the total market cap. We want to get above 1.02 trillion and get to 1.13 trillion. These are our next two resistance levels. Big resistance to get above. All right? All I circled this area. We're about to have a golden cross coming. The 50 coming for the 200 SMA on the daily. Front running that could be a good thing. It's been very good for a lot of other coins. It doesn't really change here. All right? Hit the likes. Let's get the likes up to the watchers. I would greatly appreciate it. Chat was zooming because of the book. I mean, that was awesome, right? I was like, wow, that's how fast. That's how a fast chat. That's fast. So look, we go back to the daily about to cross, right? So I just wanted to show, this is all I was doing was showing the total market cap and showing the last times we had a daily golden cross, right? So right here, and when that happened, boom, and you usually front run it like when they're about to happen. So we'd be right here, 173, and it went to 3 trillion. So really nice move. And then right here, I mean, we started, and when I was looking at was price action bump, comes up, and then it touches the 21 first. That's why I circled that area. And you can see the golden cross right there. So it's usually not a false signal. We've only had 2. This will be the third one coming if it you know, hasn't happened yet. Hasn't happened yet, but it's getting close. And did the 22 get it already? It did. So usually once the 22 does that and you stay in somewhat of a bullish consolidation, you're very likely to get it on the daily. Now, I've backtested this and seen it many times, but there's no guarantees of anything just because I've seen it many times. But dude, rest and assured that I have seen it many times. Again, I'm not a financial advisor. No, like I say, and you should be taking as financial advice. Please get yourself a financial advisor and do your own due diligence before getting into any coin, project, or trade. All right. So total market cap, we just want to see it make bacon on the beach. And yeah, don't spit your water out. I said it. But look, I mean, we want to see we want to get, the daily looks beautiful. We got this kind of a hidden bullish divergence that I keep going over. So it's an interesting concept here. And I must have drawn this on the live this morning. Kind of a cup and handle. I mean, they shoot out. It's kind of so weird how, like, show me the charts and I'll show you the news. I've never been able to really, truly understand how it works. It's just amazing to me. Fascinating. And again, I mean, you could have put total in the same symmetrical triangle, see? Just make it a little... Same thing going on. Shoulder, head, and a right shoulder still. Isn't that interesting? The inverted head and shoulder. Kept talking about that all morning, remember? The shoulder head couldn't make a right shoulder. Felt like it broke down. So look at that. Let's look into that. I mean, I guess double bottom though. Definitely a W. And the crazy wick action, whoever, you know, pour a little out for the people that got lost in the liquidations. Someone always gets caught up in the net of BOOKMAP. All right, ready? It's gone. It's gone. It's gone. Somebody always gets caught up in the net. Wow, it's mooning now. There she blows. More shorts. Oh, wow. We got to look at BOOKMAP. We have to. I mean, look at that. It's going to 23,008. It wants the 8s, baby. Show me the 8s. Bitcoin mooning on the news. And we had a feeling we were going to get the moon. Shout out to everybody taking gains. Let's take a look at what's popping here in the charts. All the high coins, man. I have to be out. The whole elite was all over them. Nailing every single one of them. I know the high ODBS. That's what ended up going up. Oh, I realized, look, if you want something, just control it and grab it again from anyone. You know, so you can always duplicate anything by just hitting control. 32% gains. I think we went over this in the live stream. And the whole market just ripping. Scallop ripping. Atom 3L ripping. I got a little shot on this puppy. Nice 18%. Unbound just exploding. Sunni, I don't know what that was. DSLA got some moves. Paribus just continued. That's insanity. It already was up 191. I guess it hit the 200 region. There it goes, 210. And that was a flag you'd have to look at closely. MNET went. Did it go again? It looked like it was about to. Still, man, a little high in the 15 minutes, struggling there. May actually redo the whole chart. Like, look, you can have this upper trend line. Still got a cup and handle feel, though. Matic 3L. So what will happen is the large caps will pump. But then, like tonight and into tomorrow, this money that Bitcoin just kind of... See, Bitcoin just grabbed money from the world market, right? People just felt like it was better to be in Bitcoin than anything else. And they ran into crypto, right? And when they did that, this is Ava lunch, which reminds me of lunch. So it always makes me hungry when I think about this coin. But it moves with AVAX. It's just a smaller cap gem on AVAX, right? Ava lunch. Ava launch. Might want to write it down. It makes good gains. Litecoin hit, right? We had this kind of going on. We had the bigger chart. Came and retested, made the angle here. And then boom. But yeah, look at 154% gains from the bottom of the channel there. It came back down, but it retested. It either comes back down or it retests. One or the other. And both of those are going to lock up with a low stoke. 90% of the time. You know? Litecoin banging on them. Ava. We got the 777 now on the concurrent viewers. We do. We got them. 777s. Every time. High ODS, just insane. This thing was hot today. I haven't traded in a long time. Just looking. Unbound pop, Sony, DSLA, PBX kept going. I was saying MNET in a flag. Could it keep going? Kind of want to redraw it after the initial, nice move. And the money's going to flow into these alts. A lot of them kind of got moved around, though. See, look at that. They followed Bitcoin too much. Ape ain't bad. Illuvium keeps going. Look at that thing. Mooning. NAKA, interesting. On the 2-hour time frame, has gas too. Look at NAKA. Hold on. Look at that. I mean, inverted head and shoulder in a way. It's a messy one, but it's there. Clearly broke out of this. I mean, that has gas. There's nothing really stopping it right there. Went through this area to the volume area high. 50 cent makes sense. No guarantees, High risk, high reward. I'd look for a flag in a smaller time frame, but that thing could move. That could definitely continue. I wouldn't be surprised if it did. BOOKMAP's fine, man. You'll be good. You'll make it through. All right. Remember, I teach class every single Tuesday from 3 to 5:30. If you want to join, jump in for $99. Hang out with me. Look, this is 3 777s, this coin. You see it? You see how it's on the 777s? You see how this crazy number follows me around right there? You see the 777s? Right here. Right there. Right there. It just sits there wherever I go. You tell me why. You tell me why. You tell me why. And now it's gone. Seems to be everything I touch turns to 777s. Phantom a go-go. Does it have a huge move? I remember these coins. They pump hard and fast and disappear. But, this moves with the Phantom. It's called Phantom Go. Right, I believe. On Go. FTG. I thought this was Phantom Go. I guess it's not. Ready for Bitcoin to be $777,770.77. Leverage 22x, 56% in the money. Whoa, baby. I would take my monies. Hey, Lifer, can you help me understand the anomaly where the RSI is high but the SRSI is low? If we follow your checklist, should we avoid trading this way? For example, Bitcoin daily high, SRSI low. Well, the thing is, you want to look at the divergences. We had an extreme hidden bullish. The hidden bullish told us we were going to move, and we had a nice bullish divergence too. Remember, I kept saying this. Remember, I said this today on, if you watch the live, I kept bringing up this divergence over and over again on the 15-minute. I even went out of my way to like talk about it on the 7 too, right? And it's right here, it's still there. But you see this swing up, and this swing down, and that was telling me that that was going to be my low, and I'd be pretty good to long this low here. All right. And then I realized the trend was this low, this high, this higher low. We just needed to make a higher high above these two lows. So then I was like, all right, Bitcoin makes a high above 23,360. That's why I kept saying that, you know, really 400 would have been great, but I wanted this area to be, we had to close a candle above here on the daily. And I circled it. Remember, even when we were here, I was like, we got to close a candle above this. And here we are in the zone. Now, what I like about this is you're above the point of control, and you're likely to get to the volume area low and at least compete with this 23,000, 24,000 area again. So you kind of just watch it. I was watching, and you could just, remember we were just sitting on the 30-second chart and just watching price action and just doing our thing, right? And that would actually get us there, see? Wouldn't take us too long. One more flag. Looks like it could happen like in the next, I mean, how long did this one take? You hit shift and you pull this over. 19 minutes. So you hit shift and you pull this over and you kind of get an idea, you know, 26 minutes, 33 minutes. You never know. Something interesting. The views, 4,077. I'm just saying. So look, we're just going to watch Bitcoin here on the 30-second chart. All right. Use the 4-hour candles and levels. Also use the MACD to tell you the Stochastic RSI could get pinned. All of us buy his yours. He won't put the banner up anymore, guys. So we're just looking for this to get a move to the upside. That's your flag on the 30-second chart. That could do it. That could do it. I tweeted on the Bitcoin, you done yet? Are you going to read all the replies? Let's take a look. And I got to jump on out of here, actually. What would you buy with your Bitcoin when it hits $1 million a coin? Wouldn't you buy? I would retire my mom and travel with the fam. That's super awesome. By the time it hits 1 million, I will already have all the material things I want in life. I'll be holding for my daughter and future grandchildren. K-Dub. I love that. Nothing passes over to my kids. Interesting. I will buy land, baby, land. I like that. Baby, my grandson has BKD and my daughter has to be a stay-at-home mom. Wow, I would pay their house off and buy them a new car and then pay my son and his family bills. Unreal, man. God bless you, man. And I'm happy that everybody's here. You know, I tried, just a moment of silence for, for the whole Nichols family and what happened there. I just, it hurt my heart even to talk about it. And I'm pretty sure everyone's seen the video at this point. And, I really wanted to stay kind of into the charts, but just a moment of silence for his family and him. We know not why God does what he does or what happens, but all will be revealed in time. I truly believe that. Anyway, sorry, I just thought about it. A car for my mom. I would leave Bitcoin to my daughters. My time, I could spend it. Many rounds of golf, trips and vacations. I like this guy. Let's hang out. Family trust. Okay. At that point, lots of arm candy. Oh my goodness. Biker crypto trader. Time to spend more time with the family, pay off my houses. Now go back 10 years, Aussie was more than the US. What happens to Bitcoin value when the US dollar crashes again? It won't be worth 32K. It'll be worth 32K US. One Bitcoin will always be worth one Bitcoin. Exactly. Building green recycles. I like that. That's awesome. Extra money to feed the poor and preaching the gospel of Jesus Christ. Amen. May you have a wonderful time. And follow me at CryptoLifer33. I'd greatly appreciate that. Thank you for the likes. Thank you for the comments. Awesome. Let's get this up to 50 retweets, 100 comments. Let's get going. 33. I'm number 34. Let's go. 2,300 people saw this and only 36 people engaged. Let's go. Let's go. Appreciate each and every one of you for being here. All right. And that will conclude the impromptu stream. I got to take a break for at least 10 minutes. I have an interview with the awesome BitLab and Kelly Kellum later on today. You're going to see that tonight at 8:30. I would be excited for that. We're going to break it down, talk about some cool stuff, ask them some questions, and have some fun. So also some cool topics to bring your way that we've researched that are relevant to today and this week. All right. So I can't wait. I'll see you all tonight at 8:30 p.m. at the premiere of The Price Report, the new show every single Wednesday night. Your host, Sam Price, with a special guest from the blockchain, The Price Report. May God bless you all. Amen.